Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets, as always, is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get into this long holiday weekend, let's recap what happened this week in the markets.
Yeah, so if we start on the cattle side, higher cash cattle prices this week, up nearly $6. If we look at those feeder cattle markets, they were anywhere from steady to $5 higher this week. On the futures side, the June live cattle futures contract was up about 30 cents, while the August feeder cattle contract closed down $2.20 this week. On the beef side, the choice box beef price fell nearly $53 this week. I remind us that's still $186 above where we were a year ago at this time. We really saw a lot of weakness across the board in all of those components. On the pork side this week, cash barrel gut prices down about $3.60. The June lean hog futures contract was up 90 cents this week. Just like for beef, the pork cutout value fell $15 this week. It also is above year-ago levels, but just $15 above year-ago levels. This week we saw really weakness in bellies that really led the way for that lower pork cutout value.
As we take a look at everything that's going on in the markets, I think we've been talking heavily and a lot about slaughter capacity. We've seen some pretty big recovery this week, and the first time since April, cattle slaughter was able to break 100,000 head.
Yeah, that's right. So, I remind us, if we were to rewind the tape just a little bit, I think almost everyone out there felt like it would take a significant period of time to recover on the slaughter side. And I should say we're not recovered, but we're certainly a lot closer than I think any of us would have ever thought. When we look at estimated weekly slaughter for this week, it looks like cattle were going to be up about 11% over a week ago. Hogs up about 1.5%. So we've made some nice improvement. We need to continue that if at all possible, I think, to start to work through some of the backlog that we have. If you look at where we sit relative to a year ago, cattle slaughter down about 14%, hog slaughter down about 8%. So again, we're in much better shape. If you remember, we were talking about versus a year ago, anywhere from 25 to 30% lower not that long ago. So it's a marked change that's occurred very nicely in a shorter period of time.
And I don't want to suggest, and I don't think you do either, that we're back to capacity and where we want and need to be. But is this also helping? And how does Monday play into this? Will we potentially see a full slaughter day? And does that help us take a chunk of that amount of backlog of both cattle and hogs?
So I am curious. I think you're right to remind us that we have a chance on Monday maybe to catch up. I'm not sure what's on Packers' schedule for next Monday, but if they were to make a full run, that might start us down the road. So that's what we need. Well, we have a long ways to go. It's one thing to break even, i.e., when I say break even, we're slaughtering enough every day to keep up with what's currently ready to be slaughtered. It's far another to work through the backlog, both in cattle and hogs. And that's going to take us a little bit longer, but working a full holiday day of slaughter on Monday is a start. And I expect that we're going to find packers continuing to be aggressive in that strategy.
It's got really a full slate of reports as we get into that conversation this week. Let's start with cold storage.
Yeah, so I think a lot of us were waiting to see what we got out of April cold storage. It was really going to be our first chance to, look at, in my mind, the effects of COVID-19. And we end up with a little bit of a mixed bag, I guess. Number one, I remind us that this was kind of during the period where we were worried about short supplies as plants were not running at full capacity. But when you look at overall cold storage stocks of beef for April, up nearly 14% relative to a year ago. Pork for April down 1.1% relative to a year ago. And some of the individuals here, when we think about pork for a minute, pork belly's up 32% relative to a year ago for the end of April. It just reminds us that it was a mixed bag in terms of what we got. You can look at the loin side where we were down 3% relative to a year ago in loins. And I think that had a lot to do with folks taking advantage of higher loin prices during that period of time, as we saw some pretty strong, grocery demand. On the chicken side, breast meat stocks 33% higher, leg quarter stocks 25% higher. To me, that just reminds us that when you see some of the food service slowdowns that were going on in the poultry industry, it shows up in terms of some of the backlog of chicken cold storage stocks that we had on hand.
As we start to see, I'm assuming when we get into that report for this next month, we might start to see some impacts of reopening and that slow, closer to normal restaurant type consumption start to pick back up.
Yeah, I think that's true. And so we talked about bellies being up so much. I'll be curious to see where we come out in May. We likely are seeing a little bit of belly pull. Now, I say that, and this week we have lower belly prices to talk about, but it seems to me we might be getting some pull in some of those categories that have just really suffered as food service has been shut down. And I always like to remind us, stocks of many of these meat products are small relative to production that we talk about. We don't hold stocks like we do, let's say, on the grain side of the equation. And so you can't read too much out of that stock report, but it's certainly important to see which categories we're growing stocks in and which ones may get pulled down, as hopefully we continue to see the restaurant side of this food service start to open and continue to open.
Up next, Livestock Slaughter numbers. As we take a look at that, really some big changes, especially on the beef side of things.
Yeah, that's an understatement when you say big changes, Megan. I think it's probably some of the biggest we've seen in a long period of time, and it just should remind us how COVID-19 has created all kinds of interesting, sometimes maybe not so interesting for some folks, changes. Beef production for April of this year down nearly 20% relative to last April. That had a lot to do with what was nearly 22% lower cattle slaughter. On the pork production side, not quite down 11% in April relative to a year ago, led by 11% lower hog slaughter. Neither of those numbers were going to happen under a normal situation. That shows just what packing plant slowdowns and shutdowns meant. When you look at weights here for a minute, I just want to remind us we're seeing higher weights already for April. The 1.6% higher on the cattle side, for hogs 0.5% higher. 3 or 4 pounds on hogs is what we've been seeing on a weekly basis, between 15 and 20 pounds being added on the cattle side. I'm not sure we're done with those kind of higher weights, but when you look at year to date, just to keep us focused here, beef production 0.8% higher year to date, and pork production 3.8% higher year to date.
You bring up increased cattle weights, and we're going to talk about that a little bit as we get into the cattle on feed report this week. Not terribly surprised as we take a look at the numbers today in comparison to pre-report estimates.
Yeah, that's right. So despite, again, a large change or a large decline in placements, it aligned very well with pre-report expectations. So the report gave us 77.7% of a year ago placed in April this year. That was just 0.5% higher than the pre-report average. Cattle on feed as of May 1 came in a little more than 5% below year ago levels. So we are talking about fewer cattle in the feed yards. And, I think the question could always come, hey, aren't we talking about backing a lot of cattle up? And I think part of what we're seeing out of cattle on feed reports reminds us that those cattle are setting out on grass in some cases. And those are still going to affect us as we go forward.
As we talk about that, do we get concerned maybe how this lays out in the price structure for the remainder of the year, or even some opportunities as well?
So I think at some point these calves, yearlings, all that have been on grass have to enter the feed yard and ultimately be slaughtered. It certainly reminds me to keep saying we're going to have heavy weights for a while. And I think that could be a supply negative for us. I think all we're really doing is pushing out when those cattle actually come to the marketplace right now. We aren't eliminating them. And so we might find ourselves in a less positive situation than we would have thought earlier as we look a few months down the road, as some of these cattle that we've been holding up try to come to the marketplace here late this year, early next year. We are certainly, when you look at what's happening in the feed yard, we are seeing a lot more cattle that have been on feed more than 150 days show up in those feed yards. You know, we're up relative to year ago levels. It wasn't that long ago we were talking about being below year ago levels. Just reminds us a lot of beef still sitting out there that could come to the market, I guess, is the very short answer to that.
I think it's been interesting. I spoke with Dan Halstrom with the U.S. Meat Export Federation earlier this week, and while exports may not stay at the level that they were in March, still fairly optimistic about how the global demand picture looks for the U.S. beef and pork markets.
Yeah, it still seems like, you know, we're in a situation where export strength could keep pulling products. And we could get in a situation where, from a domestic supply standpoint, and I don't care whether we talk cattle or hogs, in both cases, we know we've got animals backed up, and having outlets for that additional meat supply, as long as we can process it, I think is certainly important for us to understand that exports could be a nice, in some ways, I guess, relief valve to what could be a stronger production coming as we finish 2020.
And then as we wrap up today, I want to talk a little bit. We've had our COVID Q&A conversations a lot the past few weeks. Unemployment rates, we still continue to see massive filings week after week. As we take a look at that, and knowing that there might be some pressure on the demand picture and those types of things, how do we balance that looking ahead? And is that a concern also, that it could impact domestic demand?
Yeah, so let's try to answer it this way. I think if we don't see a V-shaped recovery in terms of job numbers, it's a problem. We've got a lot of folks off the payrolls at this point, unemployed, that we need employed to generate better meat demand. I think the uncertainty in all of this is how quickly do jobs become available as we try to reopen the economy. But I would be remiss not to say that if we don't generate a lot of new jobs, that's like a drag for domestic meat demand going forward. And you put that in context with what might be some higher prices. So you got a combination of higher prices and less income. It's going to affect consumption. I don't always say it shifts demand, but it certainly could hurt us on the consumption side. Less income will certainly shift demand, but less income and higher prices both are not the combination we really want to see. So there is concern there. I have a hard time feeling comfortable about how quickly jobs return. So I tend to become a little more pessimistic on the demand side as we look later this year, just given the straight job numbers that we're seeing of late.
Scott, that'll do it for us this week. A quiet week next week, a shortened week next week as well. One report, and that is?
Yeah, we'll get a C Restaurant Performance Index late next week. We'll see what we get out of that, right?
One of these days we'll start to turn those positive, right?
That's right. That's absolutely.
Scott, good to see you this week. Have a great long weekend. We didn't even get to talk about the kickoff to the summer grilling season, which officially starts on Monday. We can maybe chat about that next week as well.
Let's hope there's a lot of beef and pork on the grill next week. How's that?
Put it all on the grill.
That's right.
All right, Scott, have a great weekend. We will see you actually next Wednesday before we talk again on Friday.
That sounds great.
To have a weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can subscribe there. You can also submit questions and comments if you have those for us as well. For market updates twice daily, check out John Perkins' Market Minute, and make sure to tune in to our webinar series, which will pick back up this coming Wednesday, and we'll touch back on an update on the pork industry with Scott Brown. Glenn Tonzer from K-State will be with us, and Lee Schultz from Iowa State. Have a great kickoff to your summer season. Have a great weekend. We'll talk to you then. I'm Megan Grebner for Brownfield.